Do I need a company? Do I need a company to invest in property? Of course, this question really depends on what you're doing at the moment, whether you're a business owner, self-employed, whether you're working for anybody, and also depending on what your circumstances are. If you've already got a property, you're already investing, or whether you're new to investing, and so many factors that we would always say go and speak to a qualified accountant and tax advisor to get the best advice on what you're doing in property investing. However, there were reasons why people talk about investing in companies, and that is because a few years ago, the government decided that they were going to remove a relief that they were giving property investors against their interest-free mortgage payments. So if you bought a company or you bought a property in your own personal name and you had an interest-only mortgage, all of those interest payments could be offset against your income from that property. So for example, if I had a property and my mortgage interest only was £300 a month and the property was generating me £600 a month from rent, I could take away £300 from that £600 and any other costs, and then I would only be taxed on that what's left. So let's say I had £300 mortgage, I had £50 costs, and I've got £600 coming in from the rental. So that means 600 minus the 300 gives you 300 minus another 50. I'm then making £250 a month cash on the property, which I would then get taxed on. I wouldn't get taxed on the whole £600. Well, the government changed that a few years ago. And if you're holding it as a sole trader or personal name, or just as you, not as a company, that tax relief was taken away. So now you're going to get taxed on that £600 that you get before they start taking away any of the costs like mortgages. So that's why a lot of people moved into company purchases, because as a company, the structure is different. And in the company, it's similar to what it used to be. So in a company, when you buy something, all your cost of that purchase is taken away before they calculate the profits. So similar scenario, only this time we're talking about company or corporation tax rather than personal tax. So again, if I bought a property in a company name, so I create Neil Stewart Limited and I go and buy a 3-bedroom detached property and I then rent that property out for £600 a month, but I've got a mortgage of £300 a month, I've got some costs of £50 a month, I only pay tax on that £250 a month. So that's one of the reasons why a lot of people have gone down buying with limited companies. But that's not the only reason. There are lots of other reasons. For example, if it's your first property, you may not want to buy in a limited company because as a first property buying in your personal name, there are lots of tax reliefs that you can get involved with. So on your first property, once you get to the second property, you then start to lose a lot of the benefits of buying it in your own name. So you then may want to go into a limited company. Again, this is just ideas and reasons why people might have done it. I am not a tax advisor. I can't give you tax advice. You have to speak to a proper tax accountant to get this information. But hopefully that's useful.